PPC Ian is dividend investing for everyone. And in today's video, I want to share with you why that is the case. I'm actually right now very tired, a bit sweaty because I just got off the train. I came back from a very productive day in San Francisco. And today was our 5th ever dividend investing meetup. I've had 4 meetups so far in San Francisco, 1 in San Jose, and today I had 9 members of the PPC Ian community show up, and including myself, that's 10 of us, and 2 subscribers came all the way from the Czech Republic, 2 subscribers came all the way from New Hampshire. Today's meetup was a huge success. It was really successful, a lot of fun. But I know a lot of you out there in the community, you want to attend the meetups, but unfortunately, it's just not logistically possible. And so I wanted to take an opportunity today to recap the meeting, to recap what we talked about, and also to, at the end of the video today, share a clip. I had the opportunity at today's meetup to interview one of the members of our community on film. And so I have an interview with a community member, another dividend investor. His name is Sam. He's really cool. He's an OG. He's been doing dividend investing for a long time. And he's going to share with you all today some of his insights on dividend investing. So let's get started. So first thing today, a fun update for you. I bought some stock yesterday. I bought more shares of Altria, ticker symbol MO. And so the reason I actually did that is Altria is trading at a deep discount right now. Look, I'm already overweight SIN stocks, but I just had to go for it. They're trading at a PE of 11 right now. And it was kind of philosophical. I knew today that I was going to go to San Francisco. And I know San Francisco, they recently banned one of the products that Altria sells. And I just feel like I'm a thug life investor in the sense that I'm trying to bypass kind of that traditional life, if you will, in terms of working a job, retiring at a traditional age. And what I'm really trying to do here is automate all of my income with dividends so that I can retire early and start paying off expenses early, well before traditional retirement age. And our family, we're actually already using a portion of the dividends to pay for some expenses. I've talked about that in the past. We're trying to do something so radical, so different than what society tells us, something so different than that traditional norm of, hey, working until you're in your 60s, then retiring, and then spending all the money you saved your whole life. By contrast, I'm trying to retire really young, use the dividends to pay for everything so I never have to sell any stock, and then I build a massive portfolio that can be passed on to future generations. So it's very different in many ways than what society has kind of as that norm. And so to that extent, I just kind of like being a thug, and I like being a thug investor. And one way that I'm a thug investor is just buying these SIN stocks, because I know here in the greater San Francisco Bay Area, politicians, they don't like these kind of things. They're trying to force one of the companies that Altria invested in out of San Francisco, or at least they're saying, hey, we don't care if you leave. We don't need you here. And so the thug in me going to San Francisco today, I just had to buy some Altria yesterday to show my support for Altria. Anyways, Altria is trading at $46.23. That's where I bought my shares. It's yielding 80 cents per share per quarter. That's $3.20 a year. If I take the $3.20, I divide by my purchase price, I'm getting a 6.9% starting yield. Not bad, not a bad starting yield. And the payout ratio, by the way, based on the consensus analyst estimates for 2019, which come in at a $4.19 per share, is that basically if I take the dividends per share, I divide by the consensus EPS estimate, I get a payout ratio of 76%, meaning they're roughly paying out 76% of their earnings as dividends. The reason Altria does this, quite frankly, is because they don't want to have a lot of cash sitting around, because they become a target. They become a target to these same politicians who just don't like their company for whatever reason. And so the growth rate of their dividend, though, is really high. It's a 10.76% annualized compound annual growth rate when I look at the last 5 years. Now, will it be that high going forward? That I don't know, but that's what it's been the last 5 years. And so, look, I'm already overweight sin stocks. I don't want to buy too much more. At a certain point, when Altria recovers in share price, I'm going to probably stop reinvesting dividends, and I'll take those dividends and plow them somewhere else in the portfolio because I have too much exposure. But on the flip side, it's such a value now that I wanted to buy a little more. And like I said, Thug Life Investor, I just want to show my support to this company the day before I go into San Francisco, which is kind of like enemy territory for this type of company. So got to do the Thug Life investing. And so anyways, just fun preamble to the video today. Now I want to talk about some of the things we discussed in the meetup today. I know I'm going kind of quick, and I know this video is kind of ad hoc vlog style. Thank you for hanging with me, dividend investors, dividend community. I love all of you. By the way, if you enjoy this video, please subscribe. It means the world to me. Best way you can thank me for this content on YouTube. So, again, we had nine people show up. What an amazing community. So wonderful. And we had some repeat folks like Sam and Ivan. They have been to these meetups multiple times. So shout out to both of you. You guys are the greatest. And many new people as well. And also, again, the folks traveling from abroad and from the other side of the country. Just amazing. Thank you. Thank you. So, Let's talk about what we talked about. So one of the first topics that came up was, hey, this concept of are dividends better or growth stocks better? And in particular, the topic revolved around taxes, because as a dividend investor, dividend income that comes in, even if it's reinvested right away, that is taxable income. Now, that income typically for most of the companies I own is a qualified dividend, which means it's taxed at the long-term capital gains rate, which is 15% for most Americans. So it's taxed at a reasonable rate. But the question was, Ian, if I don't need cash flow right away, might it be better to invest in growth stocks and then transition it over to dividend stocks later? And so everyone needs to make up their own mind on this. It's a very personal decision. It's a very personal thing. For me, I'm already paying some of our bills with dividends. So the answer is easy. I need cash flow now, and I want to retire really early and live off of dividends. And so I got my answer. But look, if you're out there and you're looking to work a more traditional job, you're looking to maybe retire more traditionally and you have many years ahead of you, yeah, there's a valid point that, hey, you may be paying taxes on these dividends all these years, but not getting the full benefit of those dividends because you're just reinvesting them. And so then the question becomes, are growth stocks better because there's no dividend component or a smaller dividend component, and meaning less taxes if you're just kind of a buy and hold forever growth stock investor? Now, I'll tell you, hey, you got to make up your own mind. But one of the reasons I still think dividend investing is the best is, one, because these value stocks, these dividend stocks, they tend to outperform over the long run. So there's many studies on that. But two, think about it. Where are things going over time? Are there going to be more taxes or less taxes? And so this whole growth stock, dividend stock thing is predicated on, hey, do all these growth stocks now. When I hit retirement, sell them and move them into dividends. So that's what a lot of people think they'll do. The challenge that I would throw back to you is, okay, if you do that, what's the tax rate going to be when you retire, when you try to move the money over? Is it going to be what it is now, or could it be much higher? There are very progressive tax bills right now that people are talking about, senators are talking about, on taxing capital gains at astronomical rates. And so for me, because I know my destination is always going to be dividends, I'd like to get into it now to avoid having to sell and buy something else when there's so many unknowns as it pertains to the tax law. But I certainly believe the tax law, looking decades out, taxes are probably only going to go up. So something to keep in mind. But obviously consult your tax advisor, your finance advisor. Think about it. This was just a fun roundtable that we did at the meetup. And so I'm trying to bring that to you to get you thinking, because this is a good topic to think about. And every investor is going to be really different on what they choose to do. And so something else that came up in the meeting today is one of the members of the community, he was there sharing this app that he found that it was so cool. It's called Bumped. I've never used this app. I want to download this app and see what it's all about. But it's an app that's basically rewards you for shopping at certain places with fractional shares of stock. And now it's not a huge amount of stock by any means, but basically I'm someone that goes to Starbucks every day. In terms of full disclosure, I'm long Starbucks, ticker symbol SBUX. That's where we have the meetup too. And I can't get through the day at this point without my Starbucks. I have 2 kids. I don't get a lot of sleep. We're busy. My wife and I are both busy. We're juggling so many things. And so I need my Starbucks. He was saying that through this Bumped application, this app, you can track your Starbucks purchases and over time be rewarded with fractional shares in Starbucks. And they do this at other companies too, such as McDonald's. In terms of full disclosure, I'm long McDonald's, ticker symbol MCD. And so the cool thing about this is, again, I would get shares of stock, hypothetically here, if I sign up for this app for just shopping where I'm already going to shop. And why do companies do this? They want to create brand loyalty. They want to create loyalty with their customers. And so I'm going to check out Bumped. I'm not sharing any links here. I don't do the affiliate stuff here. I've talked about this before. Not going to get into it again. It's a pet peeve of mine out there in internet land. But I'm just talking about this because it's something new I learned about today that I want to check out. Now, the fact of the matter here is, over like a 6-month period, the community member is saying like, hey, he only got like around $15 worth of stock, but still, it's kind of cool. It keeps your head in the game. It's a fun thing to do. We're dividend investors. We love what we do. So it's just something unique that I'd never seen before. I look forward to checking it out. So one of the other things that came up today was just some stocks. So we talked about specific stocks. I'm just gonna read some of these off. We were just doing roundtable talking about stocks. What are cool stocks? I said, hey, I love Starbucks, one of my favorites because I have my coffee there every day. But one of the subscribers, my friends from the Czech Republic, were saying, hey, we actually really like Dunkin' Donuts because it's just, we like the stores, we like the coffee, we like the donuts. And so that was just a dividend stock that came up. It's actually a dividend stock I used to own. It's one of the rare ones I sold. I sold it because I needed the money a while back for an angel investment that I was doing at the time. And so it's very rare I sell stocks. Very, very rare. I honestly wish I did not sell my Dunkin' because the thing has done so well. But I don't own any now. I have no plans to buy more. But just an interesting stock that came up today. Another one that came up was Consolidated Edison. This is a utility company in, I believe, the greater New York area. Subscribers asking about that. I don't know much about Consolidated Edison. I know a lot about Dunkin', and I know that the financials are good. The fundamentals are good. It's been on a growth trajectory. Consolidated Edison, the main thing I know is the yield. Starting yield tends to be lower, but I look forward to looking at it. One of the things we discussed is, in the utility space, after we've seen what's happened with PG&E, Pacific Gas and Electric here in California, there's been some tragedies, wildfires, for example. And unfortunately, this is this horrible event, and it also creates risk for investors. And so the idea that we discussed in the meeting was, hey, if you invest in utilities, it's probably a good idea to diversify across different utilities. And so, hey, I already own a few regulated electric utilities. I want to probably buy PPL actually at some point. That's one on my watch list. But hey, maybe I'll take a look at Consolidated Edison as well. Not a bad idea to diversify in utilities because they're probably a bit riskier than most investors think, especially a single utility strategy. So we talked about like shopping malls and the future of shopping malls. We talked about the Amazon effect. We talked about a real estate investment trust called Simon Property Group, SPG, and how it's been under pressure, and some members of the community are actually buying more shares now, and they already own shares. Let me tell you about my experience with SPG. I don't own any. It's something I want to look at some point, but I own 41 stocks. I can only own so many, only do so much analysis. But SPG, they own some outlet malls around here in the greater Bay Area, and I will tell you, on the weekends, they are packed. You can barely get parking. If you want parking, you have to pay for the valet parking, or at least the premium parking lot. They have buses of people coming in, tourists, a lot of them from China, for example. They will come in on their tour bus because it's a destination on their tour. That's how popular these things are. They have all the shops, all the premium shops, and the prices are good. The prices are right. I get my jeans, that would usually be like $200, $250. I get it for like $100. And get great deals on clothes. I got a designer shirt once there for like $7. Like, you can get good deals. And so we talked about that. So within the world of retail, personally, some of the investments that have been really powerful for members of the community, one of them is TJ Maxx, another one is Ross Stores, and so SPG kind of came up as well, as it kind of fits in that sphere of influence, that it's kind of more of a bargain type place, and that's the type of mall experience that's thriving. And so certainly a REIT that I would like to look at. But we were also talking about like traditional malls, and my friends from New Hampshire were kind of saying some of the suburban malls are facing a lot of pressure in their neck of the woods. I know here in the Bay Area, the urban style malls, they're doing all right, because I'll tell you, in the city of San Mateo, there used to be a Sears, and obviously that's gone. But they built, I believe, like a really nice movie theater and some new stuff there, restaurants. And so malls in like more urban areas, they're becoming more of like a destination for eating, shopping, spending time with your friends. And so I think it's just a unique space to continue to monitor. One thing we did discuss is, hey, a lot of people believe that these malls are going out of business, these retail shops are going out of business because of Amazon. It's not necessarily true. Some retailers, like Macy's, for example, they've had some challenge keeping up with the times from maybe not on their website, but on their storefront. I've been to Macy's, and I don't know, within the last year, and it seemed like it was a bit stuck in the past. So that's their own fault, and maybe Amazon is hurting them. But other retailers, we talked about, like, I'll tell you Toys R Us, for example. The research I've done is Toys R Us, one of the challenges they faced is they got bought out by private equity. Private equity levered them up on the real estate, and they got over levered on the real estate, and that was one of the reasons for their downfall. And so that was not necessarily Amazon, but and maybe it was to an extent, but what we talked about is how private equity, they've played a role in this retail as well, and some of the challenges retail has faced. And so just something to be aware of as a investor, just from a macro level, what's going on in retail. We talked about some of our favorite retail stocks as well, like Home Depot and Walmart. In terms of full disclosure, I'm long Home Depot, ticker symbol HD, and Walmart, ticker symbol WMT. Talked about those guys as well. We talked about a local Bay Area company, Clorox. In terms of full disclosure, I'm long Clorox, ticker symbol CLX. Sorry, by the way, for all the disclosures. I'm just doing it vlog style, getting them out of the way now. End of the video, I'm not going to remember all the disclosures, so I just got to do them real time. But we talked about Clorox, how it's a local Bay Area company, Oakland to be exact, and I own it. I love it. One of my favorite stocks, top 10 stock for me, performed very well. We talked about how it never really goes on sale, and how sometimes you kind of have to just buy it on any dip because it never gets really cheap. And so that's something that dividend investors sometimes face challenge with, and that we talked about in the meetup, is that there's the AbbVies of the world that go on deep discount. In terms of full disclosure, I'm long AbbVie, ABBV. Those go on deep discount, but those are risky companies. But there's companies like Clorox. They're these premium companies. They're these household names. They're these pristine companies. They rarely go on deep discount. And so the philosophy becomes, is it right to pay up a little more for quality? Generally, I believe it is. If you have a very long-term horizon like myself, paying up for quality is not always a bad thing. And so something we talked about today as it pertains to Clorox, because look, if it dips at all, it's oftentimes a good buying opportunity for something like a Clorox. We talked about just top stocks. Which stocks do members of the community have the most money in? And so it's funny that I'm just going to list these out, and then I'll give my disclosures at the end because I own a lot of these, but Johnson & Johnson was one, ticker J&J. Altria was one, ticker MO. Realty Income was one of them, ticker O. Lockheed Martin, LMT. Philip Morris, ticker symbol PM. Microsoft, ticker MSFT. Ross Stores, I don't know what the ticker is, but I'm betting it's ROSS if I had to guess. Procter & Gamble, PG. Raytheon, ticker symbol RTN, and BP, ticker symbol BP. So these were some of the stocks that the 10 of us sitting around the table were discussing as some of the largest positions in our portfolio. So it's pretty cool to hear that from other members of the community. And in terms of full disclosure, I'm long J&J, I'm long MO, I'm long O, I'm long PM, and I'm long PG, and I'm long BP. I own all those in my portfolio. Again, apologies for disclosures. I know it drives you guys nuts. So, what else did we talk about? We talked about Bitcoin a bit. I don't want to really get into that. I have a very minor position in Bitcoin. I'm hoping it goes here from like the 10,000 level to like 50 or 100,000. I'll sell it, put all the money back into dividends and cash flow. What else? Well, one thing that was interesting that came up was we talked about like dividend payments, and one of the investors at the meetup was talking about, hey, I'm basically starting to live off of dividends, or I'm using my dividends to pay bills. And he was saying dividends, they're typically paid in month 3, month 6, month 9, and month 12 of the year. But he's kind of trying to even out his income on a monthly basis because it helps with his budgeting and cash flow optimization. So he was saying, hey, if a stock is like the odd guy out and it pays a dividend on month 2, February, he has a bias almost towards buying that stock because it helps him with his budgeting and cash flow. So I know a lot of you are interested in monthly dividends, and that's one thing he does to kind of get more monthly dividends. Obviously, Realty Income pays dividends monthly, but if stocks don't, one way to get monthly incomes is just dividends is just to diversify and to kind of put money in stocks that pay dividends different months. And he's really prioritizing the month of February. So I thought that was really, really interesting. And so we talked about what are some of the stocks we're buying now. Some of the stocks that came up were Caterpillar, Johnson & Johnson, Altria, 3M, Genuine Parts was one that came up. Another one was Cummins. So these some of the tickers here, CMI, GPC, CAT, J&J, MO, MMM. Those are some of the stocks just that members of the community are buying right now. And in terms of full disclosure, I'm long Caterpillar, CAT, and 3M, MMM. Long some of the others too, but I already disclosed those earlier. Again, I apologize for all these crazy disclosures. What else did we talk about? We talked about bank stocks a little bit, how a lot of dividend investors like bank stocks because the PE ratios tend to be lower. Something I mentioned on the channel before, PE ratio, it's a very specific concept to different industries. Some industries have low PEs, some have high. Bank stocks tend to be more low. A lot of investors, we hypothesized, go towards bank stocks because of the lower PEs, which I think investors find enticing. And so that was cool I agree. I think that's a good philosophy. I think just the collective brain power at the table is pretty high. So just having those kind of conversations was a lot of fun. Personally, I'm not really big in bank stocks. I own Bank of Montreal and a few others, smaller ones. In terms of full disclosure, I'm long Bank of Montreal, ticker BMO. Honestly, people ask me, Ian, what do you think about bank stocks? Bank stocks are all right. I'm not a huge fan because I personally like stocks that have more of a competitive moat, have a brand, have something real proprietary. And for me, I think bank stocks, does one really have so much competitive advantage over another? Not necessarily. I mean, they're all unique in their own ways, but it's not the same as like, does Apple have a competitive advantage over, some other smartphone company like Nokia, for example? Or I don't know if Nokia even makes the phones anymore, but you get the picture. And so in terms of full disclosure, I'm on Apple, AAPL. And so I don't have a good answer for the people who are there today or you at home about bank stocks. I'm going to do a video on bank stocks. I'm going to talk about my philosophies more at bank stocks. But the reason I just want to be honest with you is I don't have everything 100% figured out. And what I've found is to be a really good investor, you have to really know how to analyze stocks. And analyzing bank stocks is a little bit different than analyzing other stocks. And can I analyze bank stocks? Yeah. It's very similar to analyzing insurance companies. And I did a whole Chubb analysis on this channel a while back. In terms of full disclosure, I'm long Chubb, CB. And somewhat similar with bank stocks. So I can do it. But it's not enough about doing it. It's about where do you spend your time. And I analyze consumer non-cyclical stocks day in, day out, 7 days a week. That's my thing. And I've been doing this for years, for decades. And so bank stocks because I don't spend, I'm just not interested in them, and because I don't have the passion for them, I'll never be as good at analyzing them as I am at analyzing Starbucks, for example. And so as an investor, I have to be cautious with that kind of thing in my investing, and I have to be honest with myself. And so the take home for you guys at home, and the take home I think a lot of people from the meeting were kind of thinking as well, is you got to invest where you got the passion. And that keeps you in the game. And that goes back to that Bumped app that one of the members of the team today was bringing up. It's all about that passion, especially being a dividend investor, buying and holding forever. And so, again, that's kind of where I am with banks. I honestly have like zero passion for bank stocks, but I got a few. I know how to analyze them. I'll do it in an upcoming video. But going forward, I don't see myself going crazy on any bank stocks. I definitely see myself going crazy, as I have been on consumer non-cyclical and some of the other stuff. I love utilities. I love industrials. I love, what else do I love? Real estate. I love real estate. And so restaurants, retail, all this stuff, I love it. Banks, oh man, that's boring. And so for me, I got to go where my passion is, because that's where I have the experience as well and the drive to continue learning. But anyways, that's me on bank stocks. We talked about the Apple credit card a bit. Apple is now, I guess, releasing a credit card. So that was kind of fun. One subscriber bought up a stock in Illinois Toolworks, ITW. He was mentioning it's a little bit expensive now, but just one that us dividend investors should keep on our radars. I don't know much about it, but I've heard good things. I've heard about it in the dividend community before, so that was kind of cool. Another stock that was brought up was Carnival Cruise Line, CCL, and another one was RPM International. RPM is a cool company. It sells that like caulking and specialty products that are in the like Home Depot or hardware store. In terms of full disclosure, I'm long Home Depot. They sell like stains, for example, that type of stuff. And so that's the kind of thing that's more up my alley. Would I rather analyze RPM or a bank stock? Man, all day, every day. For real, on the real, I would love to spend my time analyzing RPM. And so that's one's kind of been on my watch list, because this one was brought up in a prior meetup by the same person. And so I thought, look, I look forward to looking into that one some more. So that's a quick overview of today's meetup. I really enjoyed it. We're going to have more. And I hope you at home, this gives you some picture. Hey, maybe in the future I will live stream one of them. I know that's been a question. I'm not kind of equipped to do that yet. And honestly, it kind of is hard to juggle so much at once. Probably need someone to come and help me with that. Have some assistance to make all of that work out. But hey, I have big aspirations for this channel, and so that is not out of the cards. By the way, if you want to have this meetup experience every day of the week, join my Facebook group. I'll link to it in the description below. It's a meetup style community there. We are just conversing about this stuff every single day. And obviously in the comments section below on YouTube, love the comments. I read them all for sure, and I try to respond to most of them. I do my best. It's hard to keep up these days because of the outpour of support, and I love you guys. Please subscribe. This is dividend investing for everyone. I'm going to do my disclosures and disclaimer. Actually, I've already done disclosure. I'm going to do my disclaimer now, but don't leave, because after that, I'm going to close out with my interview that I did with Sam, member of our community here, PPC Ian community, who has some wisdom to drop as well, and was at the meetup. We did our interview at Starbucks, just outside of Starbucks, so you'll get to see a little bit of the city as well. Okay, in terms of a friendly disclaimer, this is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my journey here on YouTube for fun and entertainment. As you guys can tell, man, I'm tired and sweaty. So, man, that train on the way home is like being in a sauna. And so it's all good. But they got to get their AC fixed, man, on that Caltrain. And so anyways, don't leave. Check out the next segment with my friend Sam. And please subscribe. I'll see you all in the next dividend investing video. All right, everyone, we just had a very, very successful PPC Ian meetup here at SBUX Reserve in San Francisco, and I have my really good friend here, Sam. Sam has been to most of our meetups so far. He is an expert dividend investor. He's been investing in dividends for a very long time. We are just chilling now outside of SBUX Reserve, talking about dividend stocks, and I wanted to take a moment to just interview Sam here so he can share some insights and thoughts he has on dividends with the community. So Sam, welcome to the channel. Thank you so much for doing this video.
It's great to be here, Ian.
Now, Sam, I'm just going to jump right into the questions. What is your favorite dividend stock?
My favorite dividend stock, I have to say, is Johnson & Johnson. I know it's an old tried and true one, but I think everybody that is a dividend investor should own some Johnson & Johnson, absolutely. It should be in everybody's portfolio. It's been around forever. It's well diversified. What can you say? I think 7-8% long-term return over time. That's my favorite one.
Awesome. That's awesome, Sam. And how long have you been investing in dividend stocks?
Well, it's only been about 10 years. I was just a general stock investor before that. Did an S&P 500 index fund mostly. Did try a few .com stocks back in the 90s. And I just realized about a decade ago that to have true financial independence, I would have to have a cash flow coming in every month. And you can't do that if you have the S&P fund because you have to sell the fund to get the cash. So I was reading many things, and after the 2008-9 crash of the market, I decided that I would go for the income versus having to sell stocks. So I started buying dividend stocks. I read a book called The Dividend Drill by a guy named Josh Peters, and it taught me everything I know, at least the basic understanding at the time, and I've been learning ever since. And when I found your channel about a year and a half ago, a kindred spirit I found, and I really enjoy your site and love these meetings, meeting everybody. It's just fantastic.
That's awesome, Sam. Thank you so much. And speaking of the meeting today, what was one of your favorite things about the meetup today?
Well, I'm one of the older investors in this group, it seems like. You're a little bit younger than me, and I just enjoy talking to young people and seeing what they're worried about and what their concerns are. And I try to talk to them as somebody who's been through all the different kinds of investing, and that's what I enjoy. I enjoy talking to people and telling my experiences, the mistakes I've made, because those are the key in investing. The mistakes you make, you tend to learn a lot more than the victories, than the successes, because you remember them. So I try to impress that upon them, and I enjoy that. I like talking about what people are buying now, the stocks that people are excited about now. I think 3M is the one that we're all sort of universally buying, which I think is great. It's a new position for me. I know it's been you've had it for a while, but I think it's a great company, and it is. I think it's giving us a great opportunity to buy a world-class company at a really good price. Yeah,
that was one of the fun themes that we discussed today. Is just understanding which pockets of stocks are on sale right now, and I think one of the pockets that the investors at the meeting today identified is those industrial companies like Caterpillar and 3M. Those are the ones that are on sale right now. And Sam, I'd be curious, do you have a particular favorite PPC Ian video that you can remember?
Gosh, that's a tough one.
I hate to put you on the spot if you don't, that's okay.
Well, and I think I commented and I linked it on my Twitter account when you did it. You had done a video several months ago about talking about what it was like to go through a bear market, and you gave the I'm losing my mind here. You gave the example of Philip Morris and the Sin stocks, and I love that video because you were so timely with it. You did it about a month before Philip Morris came out with a fantastic earnings report, and the stock went up, I think, over 10% that day. Yeah. And I just thought, this is why you have to talk about these things, because there are opportunities all the time in dividend investing.
Yes.
And we talk about it because you and I both own about 40 stocks, and we always feel that with those 40 stocks, there's something on sale. There's something that's the market has thrown out because of bad news or whatever, and there's always an opportunity to add to a position no matter when. So even in a bull market, even in a very expensive market like we're in right now, I believe we are in an expensive market, as you do, but there are pockets of value, and I think that was a good example of how you have to take those opportunities when they come along, because they don't last long. I mean, as they say, they never give you a long time to buy the bottom in a market, and I think that is what happened with Philip Morris.
Absolutely, and that was one of the things that was really fun out of today's conversation at the meetup, that when you own around 40 stocks, I own 41, I know Sam is around a similar number of positions, there's always going to be some kind of opportunity in the portfolio. Something's going to be on sale. But one of the other things we discussed is those sales, sometimes they last a while, but sometimes they don't. They might be here one day, gone the next. And so as a dividend investor, it's important always to be observant of what's happening in the portfolio, what's on sale, what's not on sale. Now, Sam, one more question for you. We have a lot of newer subscribers on the channel now. I'd be curious if you have any thoughts for someone who might just be getting started out with dividends. I know it sounds in the early days like reading books really helped you a lot, reading books about dividends. Is there anything in particular that might be helpful for someone just starting out in addition to books that you can remember from when you first got started?
Yeah, absolutely. I think the important thing is, and it's a hard thing to do when you're putting your first dollars into the market, is try to keep your fear in check. It is scary. If you're building a position, you're going to buy a stock, and then it might go down the next day, and it might go down the next day after that. You just have to keep that understanding that you're buying these stocks for a very, very long time, and that's the key to dividend investing. You have to understand you're looking out decades, not just 6 months or a year. It is a long time. But the payoff, and I'm in the position now where I'm reaping the benefit of these dividends, and it is funding my lifestyle, and it is a very comforting feeling now. But I can imagine if I was doing it now as a younger person, it could be kind of terrifying. So take your time, don't panic. Panic has never been a good strategy in investing, I'll tell you that. I was there. I was the .com thing. You get in and out, it's crazy, and you don't sleep well because of it. But just think about the future. Think about what you're going to need. As you understand, as I look at it, I have to pay bills, and that's the one thing that doesn't change in my life, and it's only going to get worse over time. So paying bills with dividends is a very, if you look at it, to me it's comforting, and I feel joyous when I get those dividends.
Absolutely. Well, Sam, thank you so much for answering these questions today. For all of our subscribers who could not make it to the meetup, thank you. Really appreciate it. Again, someone who has a wealth of knowledge when it comes to dividend investing, been doing it for a really long time. Someone who I respect in our community here, PPC Ian Dividend community, so much. Thank you for taking the time today to share your experience with everyone out there in YouTube.
Well, Ian, I just want to say thank you for doing what you do, because it is a community you've built, and a community is what you need. You need that support of people, like-minded people, to talk to you through the tough times when the market goes bad. And you do a great job of that. You're very good at explaining very complicated things in very simple ways, and that's a real talent, and I admire you greatly for it.
Really appreciate it. Cannot thank you enough. All right, everyone. Sam and I will see you later. Have a wonderful, wonderful day.